mywealth.com. I'm Bob O'Brien, the head instructor with the courses. Welcome to the blog for the day, the PE Tug of War. Now, the market has seemed to have settled into a range here, and if you watch the market, it's a pretty good tug of war going on between the bulls and the bears with the market right now. And we've included the chart that you definitely want to take a look at. This makes a lot of sense because right now, a lot of the news that's been good news that's come out or less than bad news about the economy has sort of already been priced into the market. We had a jobs report on Friday that was pretty good. The market reacted in a positive way, and it's up a little bit today as well. But it didn't go gangbusters, even though that report was relatively strong as well. So, we really want to make certain that we're in touch with what may happen over the next couple of months and, of course, into 2010 as well.
Be certain to check out the written blog at www.mywealth.com/blog. Got a lot of great links in there for you. It's also the question of the week, so you definitely want to make certain that you're checking that out. All right, the current PE ratio on the S&P 500 is 17.5. Now, if you're bullish right now, you believe that there's going to be some earnings in the future for the majority of the companies in the S&P 500. Let's just take a quick look at a chart of the S&P 500 and see where we're at, because this is important. Here's really where we were before last year, before really the bad news started hitting down about Lehman Brothers, AIG, and then of course here's these big red candlesticks is where we really went down just about a year ago. Then, of course, the market settled in for a little while through the fall, through early winter. Then, of course, came back down through March. And there's been a comeback, but it's kind of been a little bit flat over the last month or so. So we did have a pretty good rally in midsummer and so forth. But at this point, we're pretty flat. And it begs the questions, where's the stock market going? And, of course, will the earnings be there? And it's difficult to see it right now because there are a lot of variables out there that remain. And ultimately, there are a lot of liabilities that are just going to be a tax on this economy for many years to come. And we may be in for a deflationary cycle for a couple of years. We have a tendency to get optimistic about things, once we see the market coming back and so forth. And of course, who doesn't hope for that to be the case? Everyone wants to see everyone's wealth continuing to build and develop a wealthier economy. But we need to look at things objectively. Jobs are a real concern here as well. The economy is producing fewer jobs simply because people are producing more through automation. And the job outlook still does not look good. It's not going to be an immediate recovery with that. So that's another thing that's really hanging on the economy. And of course, this leads into, a weaker consumer. And the consumer has really been beaten down over the last couple of years. Another major factor out there, commercial real estate, which is, of course, a concern. This is probably one of the last legs to drop on the economy in terms of defaults and so forth. And there's a lot of rumors, and it's difficult to get a real feel for how much of a problem this is going to be and how much it's factored into the stock market already. But anyway you slice it, it's not going to be good news, and it's certainly going to strip the economy of some money. So you definitely want to make certain you're prepared for these interesting times and challenging times. So don't wait. Get educated. Take control of your investing. Get to www.mywealth.com.
These are definitely some challenging times for investors. So you definitely want to make certain that a lot of things have changed. A lot of people calling this the new normal, the new economy. You want to make certain that you have a new strategy. And we, of course, not only do we give you strategies in our courses, but we encourage you to stay on top of those strategies, to keep them current, because the times are becoming more and more dynamic. And you can't just rely on a strategy like throw your money into the stock market. Open up a 401k and just throw it into the market, and everything will work itself out in the end. It's just not happening for people. And if that's your strategy, you definitely want to be careful. You definitely want to get in a course. You definitely want to get educated and develop a strategy that's best for you. That's what we help you do. So definitely check out our Investing 101 course, which is just $99, or stock trading course. We talk about stocks today, $149. We also have a currency course, which really gives you a great global perspective of what's going on with the currencies of the world and the currents of the currencies and so forth. And of course, we have an ETF course as well. So definitely check these courses out. I look forward to seeing you in them, and have a great day.